What's the fun and the excitement for us in the cannabis industry as a compliance and also accounting firm? We solve a lot of problems in the space. So one is tax compliance. There's different tax regulatory requirements. The other main problem is budgetary. There's a lot of cash coming in, but you need to budget cash going out for a lot of the tax compliance issues. So when I step into a client scenario and I look at what's going on, I think of two main objectives. Okay, what is their current state? What is their vision? And where's the gap between that? What we do best is identify those gaps. And some of it could be people gaps, it could be process gap, it could be technology gaps. But my end result that I'm trying to achieve with those types of clients is Sonia was able to really dig in deep, really identify where we're really at, and then more importantly, find cost-effective solutions and give them options to choose from.
I have myself here, Sonia Luna, the founder of Aviva Spectrum. I also have Phil from Zero, who's also a co-team member here. He's going to help us with a quick demonstration of something that I feel extremely passionate about right now, especially with COVID, wreaking havoc with a lot of businesses, but more importantly, also in the cannabis industry. I know that most of them have gotten caught off guard with cash flow needs when it came to estimated net income taxes. So can you just say a quick hello, Phil?
Hi, everyone. It's great to be here and show you a little bit more of Zero later on.
Awesome. Great. So let's get started. What's my why? When I thought about a presentation about how to help cannabis businesses lower accounting and tax fees, my outcome was simple, because I've seen continuously over and over again, whenever we took over a client's book of business in terms of the bookkeeping, there is this way of viewing their business that I think the other traditional accounting folks just didn't see it, which is how to automate most of the transactions. So the agenda today is to share with you some of the key insights that I've collected over my 18 years of experience, and more importantly, my background in some of the bigger, larger accounting firms has allowed me, because of obviously the wonderful training that they have at those firms, how to digest and distill the processes that founders sometimes fail to identify, and more importantly, what are some of the manual processes and problems when it comes to communicating those processes to the accounting team. We're also going to talk about what can be automated, and more importantly, how COVID-19 has actually impacted these manual processes. And yes, I'm going to include some of the latest guidance about 280E, some backup. I'll share with you some critical reports that actually got issued by the IRS, and also includes some of the fines and penalties that they've been imposing, not only to general taxpayers, but more importantly, their target towards cannabis companies. And I'm going to talk to you about what does it mean to automate, and who's responsible, when can it happen, how fast can that happen, how reliable is it, and then who's really the true owner of that cycle or process. And then of course, we'll go with our partners, Zero, to give us a demo of their cash flow product that I'm excited to share with you today. So let me tell you a quick history of my background. I did what's called the traditional accounting route. I started with one of the biggest firms. Back then it was the Arthur Andersen firm, and I made a jump from there to a local national firm. It was a local company here in Los Angeles, but they grew national. And then I got recruited back to the Big Four. And here's what I can tell you with all these accounting firms, how they view your business is through cycles. And they chunk these cycles into small pieces. So accounting as a function They'll look at your cycles differently, but I'm going to share with you what's wrong with them in the cannabis industry by and large. The biggest one I've seen so far right now deals with payroll and HR compliance. What is great about it, but what's also wrong about it? What's great about it is most accountants have now caught up to the 280E cost allocation and payroll. What's unique in this COVID era is some of the HR compliances, right? The federal government has now issued some mandated time off pay, but also credits, federal credits that you have to apply for based on what you've paid employees in terms of their sick time. That part has been by and large manual, and the communication, unfortunately, from these payroll providers to the accounting function has been lagging. In other words, these new issues that COVID has presented and some of the tax incentives and what you have to file sometimes gives the accountants, let's say, literally 1 quarter, maybe 6 months down the road to correct these issues. So it's stuff that our firm has taken a proactive approach and told CEOs and founders, look, we know there's some rapid changes. We know there's things going on. You as a cannabis company may not apply for certain tax credits, but let's say you have other entities that are unrelated, don't touch the plant, that can take those advantages in terms of payroll credits. Another cycle that I see over and over again that needs improvement is the inventory management system, and obviously the 280E cost allocation. There's been some recent tax court rulings back in 2019, but more importantly, a very huge report that came out from I call it the watchdog within the IRS. It's called the Inspector General of the IRS. And their job, their main focus is to sharpen the skills of IRS agents. I'll share with you some findings in the recent report that was issued this past March and how it impacts both the inventory cycle and the analysis on 280E. And what's wrong with this cycle in the manual context is if there are job positions that have changed because of, let's say, COVID, it could be a reduction in force, or hopefully you're growing and you're now delegating more, let's say, responsibility to multiple people. We'll talk about some of those manual changes and what you need to do with your accounting staff to make sure they're caught up to speed. Then there's the sales and cash receipt cycle. I'll cover some of my top 5 tips about not only cash receipts, but some of the issues that COVID has now introduced that is extremely manual in terms of pickup and payments and some of the local authorities. Now, sales, the one thing I want to leave you with in this slide with sales is I call this a 3-point check. Your bookkeeper should be checking what you're submitting to Metric, should be checking what's in your point of sale system, and then finally doing a reconciliation to the general ledger. I know for a fact that there's some companies out there in the cannabis space and also just not in the cannabis space that have what's called afterthought adjustments, meaning, oh, dang, I submitted this, but the reality is after doing an inventory check or looking at some refunds or what have you, some changes, there were some minor mistakes and an adjustment happened to a prior period. That communication rarely gets funneled back to the accounting department for those changes. So what you should have is a system with your accounting department, your financial advisors, is let's just run a report on any adjustments that have actually taken place on prior periods of work that they've already completed that need to be adjusted as well for the general ledger. And lastly, vendor payables and expenses is another cycle that I've seen about manual processes, not only for, let's say, tax payments, which you have to book an appointment if you have cash and you're trying to pay those out. But then I'm going to delve into some credit card issues that I've seen founders perform and how to automate that and save not only hours on their side, but literally several hours from the accounting department. Now, there's one cycle that gets it's not really defined by the co-founders, but it's an expectation. It's those financial reports that need to come to them. But more importantly, there should always be some type of budget versus actual or a key performance indicator, also known as just KPIs. Right now with COVID, I highly recommend that cannabis clients and even non-cannabis clients are working with their financial advisor every month on what they believe is their lowest set budget of what they expect on cash coming in and cash going out. And also look at what I call lead indicators, which are typically related to sales. To give you an example, I'm not only a CPA in the cannabis industry, but I'm also an investor. And when I invest in a cannabis company, I ask some of the founders, like, tell me more about your lead indicators when a marketing campaign goes well. Okay. In cannabis, it's typically for retailers, to give one example, it's samples. So I look at those lead indicators because I know there's a sales conversion ratio. So understanding those KPIs and working with your accountant to make sure it's properly reconciled for those samples helps you not only understand how well your marketing campaign is going, but also how realistic is your budget versus actual when you're working with your financial advisor. So here are some of my typical concerns that I think I hope this presentation will give you what I call a pause. Okay. Recently, we've been having some dialogue with prospects. These are not our clients. What's happening, and I don't know if it's 100% related to COVID or if it's just the nature of emails, but Google recently put out a warning that the phishing scams that are out right now had an uptick of over 18%. The average user that has an email that's in the executive team level or management level gets over 120 emails a day, according to IT reports and other studies. When I discovered that study, I said, what we do internally, what we advise our clients is let's come up with a general accounting email. And if it gets too inundated with just general questions that, let's say, really pertain to payroll, then we can create another, email account for payroll. Our goal internally at Aviva Spectrum is I want to automate over 50% of those emails coming in that relate to accounting. Okay. The future of accounting is to tag and automate the transaction that hits your general ledger account. So that's an internal goal. Our success rate is 100%. We actually go above and beyond. We get somewhere between 75% of the emails, sometimes 80% of the emails are automated and linked to some type of transaction. The other is, in certain recent conversations I've noticed with founders and other startups, is recurring stuff, right? It's some of the stuff that you didn't realize you needed to do, or it wasn't part of the original plan, or let's say there was a acquisition that you needed to conduct, whether that's an asset or you're getting an insurance policy for the first time and that's a prepaid item. What I'm getting at is accounting, by and large, there should be some clear known items. And there are ways to automate those clear known items. I can't tell you how frustrating it is to see clients, or I'll say prospects in this case, because these are all prospect related concerns that I've seen recently, where I'll take a look at their balance sheet. I know they have fixed assets. It's clearly stated, but the depreciation stays the exact same amount every single month. Okay. The first thing is that's not US GAAP. Every single month, your assets are depreciating. Just as if you were, let's say, you owned your own personal car, right? Every day that you own it, your own personal car is not the value that you actually purchased it on day one, right? So why would you expect your business assets to be the same? These things can easily be automated and saves not only you time and frustration, but also your accounting team some frustration as well, just getting the dialogue going with the founders of what needs to be automated. Lastly, I'm going to share some shocking reports and fines that I know for a fact the IRS not only has a target on cannabis in terms of audits that they want to go after, but how they make money off of the 8300. 8300 form is part of the Bank Secrecy Act. Okay. It was signed into law years ago. The people or entities that usually have to comply with this are banks and, believe it or not, auto dealerships. They get a ton of cash. And The form was used to help fight organized crime, right? To get this, it was supposed to be a way to identify cash payments. What we recommend is a three-way match, both on your point of sale system, but your cash log, and of course your accounting system. So what's still manual in the accounting process by and large with a lot of the cannabis companies? I'm going to now delve into some of the more detailed items. Most cannabis clients, unfortunately, do not have a solid, dependable banking relationship. So cash pickups is obviously one of those issues that they have to deal with. You might have a delivery person that's picking up the cash. Usually they manually write something down on a form, and rarely do they ever complete the Form 8300. In addition, cash payments, especially some of my founders, when we initially brought them on as a client, they were using appropriately, their cash in the safe to pay both, state and federal taxes. And also they're trying to move towards local taxes. I'll tell you the problem with local taxes today. Today, local authorities may not be as lenient as our state and federal government because of COVID. So some of these payments, they do expect you to pay, especially now that there's already been delays all the way to July of this year. Local authorities are now really wanting companies to make good on those cash payments. The problem here is this back and forth on making an appointment, communicating with your accountant, understanding your cash flow model, and finding out what do you really have to pay for those taxes. What I found by and large is founders sometimes do not carve out separately the cash requirements for these taxes. Now, credit card reimbursements. Because of this lack of banking, I've seen a lot of not only founders, but let's say managers and operators in the cannabis industry using their own personal credit cards trying to get reimbursement. Here's the warning I'm going to give you, and I'll go over some reports in a little bit right now. The warning I'm giving you now is when we talk to certain prospects, some of them push back on us trying to automate the credit card reimbursements. One of the pushbacks that we've gotten or objections is, well, my accountant told me that anything below $75 is pretty much immaterial and the IRS doesn't need a backup or a receipt. I can't tell you how wrong of an answer that is. Okay. The rule is, yeah, sure. By and large, for most businesses, anything below $75, you don't have a receipt, the IRS may look away and not penalize you. But remember, if you're a cannabis industry, you already have a target on your back. The IRS has already proven that they make money whenever they audit a cannabis company. So when they find penalties and fines, and they see that you've neglected certain processes in your accounting records, that $75 threshold gets thrown out the window. Their argument, the IRS's argument is, well, wait a minute, you were deficient here, you were deficient there, you're deficient here. The $75 rule of you not needing backup is only good if we find that you have great processes, you've got great accounting records, you have backup and support and policies, but you don't have that by and large, okay? Or most cannabis companies don't. And I already alluded to the Form 8300 and the compliance with W-9 forms. The W-9 forms is your, I call it super bulletproof way of allowing you to not only submit a form, but get customers to put their tax ID number so you know you're compliant with most of the form. There is a top portion of the form that the individual giving you the cash also needs to put their tax ID number, and I know that's a struggle. If you go to Aviva Spectrum website, we wrote a specific blog on the 5 common mistakes I see over and over again on this form. You can take a look at it there, and I cover ways on how to comply and not get subject to some of these penalties that I'll share with you in just a moment. The last is the payroll reconciliation, which I've already mentioned a little bit earlier, that the big players, ADP, Paychex, these are names that you already know, okay? Right now, they're hands off. The great thing about their business model is I call them like the dolphins of the ocean, right? They play nice with everybody in the accounting industry, meaning They want to integrate with every accounting package. So some of the players we see in the cannabis industry are mid-tier players, and sometimes they don't integrate with every single accounting package, or the integration is so cumbersome that we end up doing it manually anyways here at Aviva Spectrum, because their processes or their reporting features cannot export to, let's say, something easily like Excel. It's typically sometimes in PDF format. So where do we go from here? What's the future of finance? What do CEOs want out of an accounting team or a bookkeeper? This is a great study that was recently done. I'll have a link to this study directly for anybody who wants to read the highlights. One key highlight that I noticed immediately was, how do executive team members want a relationship with the accounting team or their contract CFO? It's a strategic partner, right? They don't want someone that just closes the books and makes sure that, they have backup for everything. They want a strategic partner. In the study, it clarifies, well, what does strategy mean, right? You might have a thought of what strategic partnership might look like for an accounting team. I may have something in mind, but this study highlighted that cash flow need of a strategic partner, especially in this COVID era that we're dealing with right now. They want the accounting team to help predict things that are about to happen in the next 2, 3, or 4 months. That's how fluid changes are happening today. And if you don't know about KPMG, this is just a quick FYI. KPMG is one of the largest accounting firms that I highly respect. They conduct this study, this transforming financial operations, this extreme automation, the future of finance, every single year. This percentage that I'm showing you, 70%, a few years back was actually 60% related to strategic partnership relationships. So it's actually increased over time. So the demand for accounting advisors and strategic partners has actually gone up in terms of the expectations of CEOs. So what do the CEOs do if they want a strategic advisor, but they don't have it? That same study showed that they're making decisions based on their past experience rather than actual data, insights, objective, data points that they can point to. Okay. This is actually a sad thing, that if they don't really have that leverage of a great partnership with the accounting department, they're actually making decisions based on their past experience more than actual objective data. Now, how do we get there? If this is the true reality for cannabis, to try to move into a direction where you're not only going to survive COVID, but thrive off of it and grow, how do you eliminate those manual, mundane items to lower your accounting fees, get the best accurate, bulletproof, audit-proof type stuff for 280E over and over again that you trust is going to be reliable and you're ready for any type of IRS audit? I'm going to distill it into 3 main points. One is the planning phase. There's going to be some updates to 280E as you are planning the rest of this year. Okay. And I do recommend that the executive team get together and find out, where are we today? What are our actuals, but what's the future hold for the current period, meaning the current quarter and the next couple of quarters going out. And there are some updates in terms of the tax court rulings for 280E. Unfortunately, 280E is a sticker that the IRS knows in a tax court setting, the cannabis companies unfortunately have a losing position. Okay. And I say it's sad because certain tax court cases have had some favorable responses. The one that I think a lot of people have heard about is the suit, the tax court ruling related to Harborside. Why? Harborside's a big player in California. Now, the judge was lenient on the penalties and interest on those penalties. And quite frankly, if you guys saw the numbers, this was in the millions of dollars, by the way, because this tax court they saw years and years of data. And so, as you can imagine, the IRS can grab that amount of money from, 3 years down, when they first started out with this tax court initiative. So I personally believe that if that judge wasn't as lenient as he was, that actually Harborside would have had to have filed for bankruptcy because we're talking about millions of dollars of cash that they would have had to pay. The second thing you can do to get there from manual to automation is chart out your top 5 manual areas that you know. I already gave you the nerdy way of how accountants view, your business, like the sales cycle, your inventory management cycle, all the other different cycles. Chart out just 5 areas you just hate waking up in the morning and you get either an email or you get your staff asking you questions and you're just like, damn, why am I getting all these questions? Why can't I delegate this? That's a good starting point for you, especially if it's inventory management, or let's say it's the Form 8300, someone's asking you questions about that. That should probably be on your list. I'm going to give you what I've seen are my top 5 for cannabis that transition from their old accountant to us. And this assumes startup kind of companies between like 10 employees, but they have less than 20 vendors. So they're truly startup. The first is go to your revenue, your sales items, your sales cycle. How do we automate bank reconciliations and the cash logs? You could save anywhere from 2 to 3 hours just of your time. Cash receipts in the Form 8300, not to mention the W-9. If you can automate that, you would be saving you and the team at least 2 to 3 hours, at least weekly. Okay, weekly. Why? If you really read the instructions on that form, it says you've got 15 days from when you got that cash to report, right? So can you imagine trying to run cash receipt reports every week, right? There's ways to automate some of the reporting features and taking in that customer data automatically so that you can fill that out, saving you 2 to 3 hours every week. The other is inventory management. And you'll see as I'm going through my top 5, these are the hot button areas that the IRS and state tax collectors focus in the most, right? So inventory management and reconciliation, I already alluded to it earlier. There should always be a 3-way match. What you reported to your state, local authorities in terms of metric, what your point of sale system has, and then what your general ledger should look like, right? You're reconciling between the 3. And then number 2, hindsight's 2020, right? So if there's been changes, there should be an automated report that can be emailed to the accounting team that says, hey, by the way, the last month we had to make an adjustment, right? Just to give them a high alert that they need to make adjustments to the general ledger. Then finally, vendor payments and backups. I'm going to share with you the reality that accounting is automating attached support to accounting transactions. With vendor payments, you can always request them in an email to say, hey, if you want to get paid, attach the invoice. How is that important? You could be saving 1 to 2 hours just for yourself in not only creating rules in your email account that you've set up for accounting, that it gets submitted into your accounting software that will save you 1 to 2 hours at least monthly. So you're not dealing with a back and forth email with your vendors that need to get paid. And then finally, there's always been, for some reason in the accounting profession, some of the bookkeepers, traditional bookkeepers that still use a big product that is known in the marketplace called QuickBooks. What I have found is I call QuickBooks kind of the nickel and dime kind of software package. Why? Every single time I've tried to create a fixed asset inventory list and try to automate the journal entries to depreciate, it usually always costs extra with QuickBooks. With Xero, we found not only ways to automatically depreciate it, but it literally takes seconds to get it done. So this can easily save you an hour every single month for updating your accounting records. Now, here are my updated tips for 280E and the manual processes around them in lowering your accounting fees and tax fees. This was the shocker in the accounting profession. I know most of you as founders and cannabis executives don't read up on what the Treasury Inspector General does for the IRS. This department, their sole responsibility is to look at how the IRS works and how to make them better. Okay, that's their function, right? So this report that came out in March basically said, hey, IRS, we're not doing enough to audit cannabis companies. Why do I say that? I say that because the title of the report says, there's a growth in the marijuana industry and we probably need to give them tax guidance. There's some compliance issues. And to me, I read through the whole entire report. To me, this was a warning, a red flag that was issued to cannabis companies, because in this same report, which is over 100 pages, by the way, this same report showed how much money an IRS agent, a tax auditor, right, goes through. They make over $1,000 an hour when they audit a cannabis company. That's how much money they're getting from that audit. Okay. So they started a series of audits using 2016 data, and then they updated the data, their sample, okay, and they made more money. So in other words, imagine this inspector general just wanted to kind of play with some numbers. He wanted to see, hey, what happens when we just take a small set of cannabis companies in a few states, like Washington, Oregon was included in the study, and they did less than 500 tax returns. Okay. So in that smaller set, they made $1,000. Then they said, what happens when we look at future periods like 2017? Oh, wow. We make about $1,200 an hour for each IRS agent, going out there. So it is a big issue in the cannabis industry that their statistical random samples have proven that about 60% of you have some type of 280E adjustment. So getting your accounting records not only automated but accurate, right, is going to save you millions of dollars in potential fines. So what I did is I took their data, their highlights. Essentially what this report told me, for each taxpayer in their little sample set, they had about 200,000 in adjustments. Okay, just adjustments. Then this report said, well, wait a minute, if you had to adjust something in favor of the IRS to get more money out of you, how much was the federal impact, right? They had 95 million for this super small set of samples. That means those taxpayers had to pay, just for the IRS, 400,000 in that small little sample. Now, let's talk about Form 8300. I told you I was going to give you the heads up about penalties and how the IRS views it and how critical it is for the accounting function to have accurate data. So there are different types of penalties. There's civil and just regular penalties. There's two types of penalties when it comes to violations. You violated the regulations of the Bank Secrecy Act. If you just forgot, you neglected, but you had policies and procedures and somebody forgot to do it, okay, it's $500 per violation. But if you willfully violated, it could be $100,000 or 50% of the amount involved in your cash transactions, right? So who gets to dictate what is neglect versus willful violation? It's that IRS auditor, okay? So you may get lucky and get a nice person that might get you a $500 violation charge, or you could get unlucky and get to $100,000 in violations or 50%. Not to mention, so that's just, they found out you didn't do the forms. Okay, let's imagine that. Now, once they found out the quantity of forms, they can penalize you for $50 for each return that you do based on a calendar days, right? Because you can obviously correct things, you can update things. And so I'm sharing with you this report that I gathered from the IRS website shows different methods of how they can calculate other penalties for failure to file, even if you tried to correct it. And you can see right here, they can put $50 per item, right, per form, and $100 if it's based on things that have been corrected after 30 calendar days. The average cannabis taxpayer that we've looked at in our sample set could come up with about $10,000 in fines and penalties because, and my average is based on basically cannabis distributors and manufacturers. Why? Cannabis distributors, if you really think about it, they're the middleman collecting cash from both, let's say, cultivation type taxes, or say they might be getting cash from different buyers that are buying, let's say, trim, biomass, or the flower. They're the middleman that not only gets cash, moves cash, pays cash, right? Their volume of forms is anywhere from 5 to maybe 10 times greater than other cannabis licenses like cultivators and retailers, right? So the fines can increase dramatically. Now, what am I trying to achieve in trying to get you to understand not only do you need to get accurate, complete financial data in your accounting system, but I really think those that are going to survive COVID and thrive to the next year and the following year, they're going to have to get a handle of their cash flow. Now, sales forecasting is a great method to not only find out what cash is coming in, but I found this blog that Zero, one of our partners, has provided us a well worth read, especially for small businesses. It gives you 4 different models that you can choose from to simplify your forecast, and it's worth the pain. I'm telling you, it's an easy read. It takes you less than 10 minutes. You as an executive can identify which method works for you and implement it literally. If you choose us, we usually implement some of these sales forecast models within 1 to 2 days. So now I'm going to do a quick polling question of who is the government agency that has proven time and time again to advocate for forecasting. We're going to get to the stats before I open up the polling question. So here are some statistics of this agency. They were established in 1953. They have an office in each of the United States. They have 900 business development centers. They have 110 women business centers on top of the development centers. They have a network of advisors called SCORE, and they have 350 chapters. They were the ones that sped up the loan process for COVID. That hit over $349 billion as of April. I know a lot of you heard about the relief packages, but I got this straight from their site. It was $349 billion as of April 20th. So let me open the polls. All right, let's see. Is it the U.S. Treasury? Is it the Department of Commerce? Is it the SBA? Or is it the FBI? Great. Yay. It looks like everybody's paid attention to the news. You're right. It is the SBA. And so what I did is I took the source data of how to calculate your startup costs straight from the SBA website. They have business guides and templates, and of course, I've highlighted what hits home to me, which is they've even figured out what you need to plan for, hiring an attorney and accountants. These are free resources for you. This right here, again, it's part of the SBA website and some of the free resources. I found a forecast or a budget, if you will, of expenses. The great thing about this template, which if you go to SlideShare after this webinar, I'm going to submit my slides up there. You click on this link and you're going to get access to all these tools that the SBA has provided. As soon as you make a change in this dynamic PDF, it'll recalculate what funds you're going to need to have. Now, this is I call it a BandAid approach because it's extremely manual, right? You're going to go line item by line item, click the amounts and type in the amounts, et cetera, et cetera. But there's a better way to forecast. And I'm going to delve into Zero in just a moment and toss the baton to Phil to show you how dynamic Zero is in the forecasting world and where the future of accounting is headed. This report is from an entity called IDC. They are an objective third party. All they do is they create marketplace surveys, and they try to identify leaders in various spaces, especially in technology. Here we see on the left side, you'll see this is the XY axis that we're very familiar with. There's capabilities and strategies. Now, you'll see Xero is not only a thought leader, but on the very top of this quadrant that you're looking at for leaders. Excuse me. Intuit has a bigger, you'll see, circle. It's the orange circle. That is your QuickBooks company. Intuit owns QuickBooks and every part of QuickBooks. I already mentioned my gripe a little bit with QuickBooks, the nickel and dime strategy. But what this offers people who haven't even heard of Xero, at least some objective data that an outside party, similar to like what I would call, the consumer reports, some of us who buy, appliances or cars, we look to an authority that is objective, clearly has a strategy on how to rank things, test things, etc. IDC is that company for you to benchmark software companies in the accounting space. And Xero is definitely one of the thought leaders. Now, here's my case for forecasting. If I haven't already made an objective case why the SBA thinks it's great to have cash flow and forecasting. This is a wonderful read that Xero Partners put together about how to survive and thrive with COVID impacting your business, especially when it comes to short-term cash flow items. All right. With that, I'm going to hand the baton to Phil to share his demonstration of a new feature that Xero has created, just so you guys get a glimpse of how it works. All right, Phil, I just made you presenter, and I'm going to mute myself. All right, Phil.
Okay.
Perfect. Oh, I see it. Beautiful.
All right, great. Thanks. And as we heard earlier, accounting should be the role of a strategic partner or advisor and not just a scorekeeper. It's a focus of Xero and the features in the product to enable better business to accountant relationships, and especially with this tool that I'll show you today, which is the cash flow reporting. So right now we're just looking at Xero, and this is the landing page when you come into Xero for your business. And the short-term cash flow tool is right here underneath the business tab. Traditionally, accounting was always backwards looking. Activity was recorded after it took place, and reports were only able to tell you what happened. But how do you know what's going to happen and plan for the future? In today's world, the most efficient accountants are using technology like Xero to be able to view activity as it's going on from multiple applications and users simultaneously. There's no more needing to wait for the end of the month to process transactions and to provide insights into your business. Xero's cash flow tool allows users to take a 7 or 30-day projection of your bank accounts. So from here, you just select your bank account and then that projection range. And with financial cash flow formulas built into this dashboard, you're able to clearly see what your balance is projected to be on a date, just by hovering over this visual graph right here. The information feeding into this is all held within Xero, and it can be easily edited and maintained right from this page. For example, by adding dates of money that you expect to come in and when you plan to pay bills, the projections will immediately take effect. Everything that you need to update to keep this accurate is accessible right within this dashboard. So we're able to look at invoices owed to you, and you can change the look of this. So it can be either grouped by dates, being those important dates you expect to receive money, or I can change this by contact, and you're able to see those important customers who owe you money and expand this out. If I wanted to change my expected date of this, I can simply open that up, take a look at that invoice, and change the date. So for simpler managing of accounts payable and accounts receivable, it's quick and easy to toggle these views, which show either important dates for the cash flow broken down by your customers and also by your vendors, which we can sort here on the bills that are needed to pay. By being able to do this, it allows you to pinpoint items that might need attention or just need to be updated. Additionally, the accountant and business owners can collaborate in real time on next steps to take to manage the cash flow. To help this, Xero is even suggesting actions over here on the right-hand side to take in order to keep a handle on any outstanding invoices or bills that you have coming up. As more phases of this feature are released, Xero will be able to help accountants and businesses with their activity, such as estimated tax payments, payroll, or monthly transactions like leases, equipment rental, utilities, and more. So managing cash flow this easily will also promote deeper conversations with your accountant and a deeper understanding of business goals to be successful going forward. In your industry, you should focus 100% on running your business. And by connecting with an accounting professional, businesses are more financially stable, more than twice as likely to succeed, and it will take away the stress of compliance and taxes. This is just one of the many tools in Xero that Sonia and the team at Aviva Spectrum have, which means that they're spending less time purely crunching numbers and more time providing valuable insights, saving you cost. For any more information specifically about Xero and all the features built into the product, please just go to Xero, that's with an X.com, or ask the team at Aviva Spectrum. And that's that for the short-term cash flow. It's pretty simple, and I'll hand it right back to you, Sonia.
Great. Thank you. Oh my God, that was beautiful. Short, sweet, simple, great business case right there. I love it. Thank you, Phil. Let me share the last set of items that I really wanted to hit home to you guys today. And that's what we came to do here at Aviva Spectrum. Is when I first came into the accounting industry, I didn't really have a choice at Arthur Andersen. They kind of just put me in, different companies and clients. And when I finally went on my own, I made a decision over 3 years ago that I would help the cannabis industry. One, I knew my peer group, Ernst & Young, KPMG, all of those big companies wouldn't touch it because it's obviously a federally illegal substance at this point. Lo and behold, the year that I came out, so I started in late 2017 and 18, there was an award show. It's called the California Cannabis Awards. And I was very fortunate to be nominated by the cannabis industry, and I won that year. I was very honored and privileged to not only be mentioned, but then I was also mentioned the second year when they had the award show for CPA of the Year. I didn't win, and I'm happy that it went to a different colleague. That is great. But I'll tell you what, the thing that drives me with cannabis companies is the people. I have found them to be the most collaborative type of people, the most honest people, believe it or not. I know people talk about the illicit market and them coming to a legal market. And I think they're very grateful for the type of advice I give them because I've been open, honest, and real with them the entire time. What I'm about to offer those that are participating today and then in the next 30 days from this webinar is a free accounting diagnostic. It's something that I've created that takes apart the key insights that I know what the IRS is focusing on, right? So it includes my 280E strategy, some of the key issues around that. But then I have other 10 key areas in those different business cycles that I know that can be automated for you. You'll be doing it with me personally. And in terms of new clients that join our firm, to put it out there in the marketplace in order to give back to our cannabis community, we normally have a setup fee because you're going from, let's say, another accounting package and then coming with us on Xero to automate your accounting function. We normally charge $1,000 for this setup fee. We are now offering it for free. Any new clients that join us within the next 30 days get that setup fee waived. The other part to give back, and I know COVID has wreaked havoc on a bunch of businesses, we are offering a 50% discount on our bookkeeping fees for the first 3 months. So although it's not a free set of services, I have to pay my bills too. But this is the deepest discount I've ever given in my entire career to help the community out. It's kind of a way to not only get on board with us, let us prove to you the value of both Xero, the automation techniques that we have, so it frees up your time. And I've already given the business case of how many hours, either by month or by week, that you will save by not having to deal with the mundane stuff. You can get that free of charge at info@avivaspectrum.com, and just email us and type in the phrase, diagnostic or what have you, and you'll get that with me personally here at the firm.
Preparing your accounting records causes stress, the #1 killer for business owners. Aviva Spectrum takes away accounting stress. Email us today at info@avivaspectrum.com and receive a stress-free accounting diagnostic.